Hello everyone, welcome to Tesla Daily News. Today is June 30th, Tuesday, and the following is the latest Tesla news. According to recent market data, Tesla stock closed at $420.60, up from a previous close of $411.84. The session opened at $406, matched its low at the open, and touched an intraday high of $424.54 on heavy volume of about 43 million shares. Technically speaking, the strong gap up from the open, close near the top of the daily range, and above the prior close suggests bullish momentum and aggressive dip buying after recent weakness. In 10 words, bullish day, strong volume, breakout attempt toward recent resistance zone. For short-term traders, the key levels to watch are support near the 406 to 410 area, and resistance in the mid-420s and above. For longer-term investors, this kind of high-volume up day ahead of the delivery report can indicate growing optimism that fundamentals may surprise to the upside. According to the Motley Fool News, Tesla shares could go sharply higher after early July as Wall Street focuses on the upcoming second quarter delivery report and several key product catalysts. Analyst Mark Delaney from Goldman Sachs recently raised his delivery estimate to about 420,000 vehicles for the quarter, up from a prior forecast of 405,000. That would represent roughly 9% growth compared with the same quarter last year and would be well ahead of current consensus estimates, which cluster in the high 300s to roughly just above 400,000. The implication is that if Tesla reports delivery numbers around or above that raised estimate, investors could see a meaningful positive surprise versus expectations, potentially driving a further rally in the stock. The article also highlights that Tesla did grow deliveries in the first quarter, but results fell short of market expectations, which weigh on sentiment. This time, if Tesla can turn that narrative around with a clear beat, it may help reset the short-term outlook. Beyond deliveries, the piece notes that Tesla plans to unveil Optimus 3, the next generation of its humanoid robot, in late July or early August. If the demonstration validates Elon Musk's claims about improved capabilities or a credible path to cost-effective mass production, markets may begin assigning more tangible value to Tesla's robotics ambitions, not just its vehicle business. The article additionally points to ongoing progress on full self-driving and robotaxi plans as another potential driver of sentiment later in the year. At the same time, it cautions that Tesla still faces regulatory risks, particularly around autonomy approvals and potential labor market concerns tied to humanoid robots, as well as intensifying competition from other electric vehicle makers such as Rivian. The stock's valuation remains demanding, trading at a very high multiple of forward earnings, which means execution needs to be strong to justify the current price and any further run-up. The conclusion for investors is that Tesla may be attractive as a small, long-term position for those comfortable with volatility, especially if near-term catalysts like deliveries and Optimus 3 land positively. According to CZ, Czech Financial Commentary is exploring a bold scenario in which SpaceX, newly listed on public markets, could eventually acquire Tesla and merge the two into a combined artificial intelligence, space, and transportation powerhouse. SpaceX recently completed its initial public offering and, according to the article, now carries a market capitalization north of roughly $2 trillion, while Tesla's market value is estimated around $1.4 trillion. A theoretical all-stock combination would create a mega company with a combined value in the region of $3.5 trillion, instantly ranking among the most valuable corporations in the world. The analysis notes that while Tesla is best known as an electric vehicle company and SpaceX as a space launch and satellite communications business, both are increasingly focused on artificial intelligence. Tesla is investing heavily in vision-based autonomous driving powered by in-house AI models and specialized compute, while SpaceX is positioning itself as a broader AI platform owner, with projects like XAI and the Grok model, as well as the recent acquisition of developer tools company Cursor to strengthen its AI capabilities. In regulatory filings, SpaceX reportedly frames much of its future revenue growth around AI-related opportunities and references Tesla dozens of times, signaling a tight strategic relationship already in place. A merger, the article argues, could unlock deep vertical integration, shared data centers and chip development, coordinated AI research, tight integration between Tesla's energy and battery products and SpaceX's infrastructure needs, and unified management and boards. It points out that SpaceX already purchases products like energy storage systems and Cybertrucks from Tesla today. Because SpaceX is currently not generating the level of free cash flow needed for a large cash takeover, any acquisition of Tesla would likely be structured as a stock-for-stock deal using newly issued SpaceX shares. The piece also emphasizes governance and legal complexities. Elon Musk reportedly controls more than 80% of the voting power at SpaceX, so a merger with Tesla would, in effect, involve Musk on both sides of the transaction. That raises the risk of shareholder lawsuits from Tesla investors who might argue that the deal terms are not sufficiently arm's length. However, under Texas law, where Tesla is domiciled, derivative suits require plaintiffs to hold a sizable stake, on the scale of several percentage points of the company, which translates into tens of billions of dollars at current valuations and creates a very high barrier for legal challenges. Regulatory review would be another major hurdle. U.S. antitrust authorities, telecommunications regulators, and national security agencies would all scrutinize any attempt to combine a leading electric vehicle maker with an essential space and satellite communications provider, especially given Tesla's significant links to China and SpaceX's strategic importance for American defense and communications infrastructure. The article suggests that the current U.S. political environment, under a more business-friendly administration, could be somewhat more open to such a transaction, but there is no guarantee. For Tesla investors and enthusiasts, the scenario remains speculative but underscores how central artificial intelligence and integrated infrastructure are becoming to Musk's broader vision. According to Golem, a German technology outlet, Tesla has been dealing with a series of high-value battery thefts from its Gigafactory in Nevada, highlighting operational and security risks within its supply chain. Since December of last year, battery packs worth up to several $100,000 per incident have reportedly gone missing from the facility. The article, based on available information, suggests that these are not small-scale consumer thefts but rather sizable industrial losses, implying involvement by individuals with access to internal logistics or storage. For investors, while the absolute financial hit from such thefts is modest relative to Tesla's overall scale, repeated incidents can signal underlying weaknesses in internal controls, inventory management, or contractor oversight. Battery packs are among the most valuable components in electric vehicles, and any leakage of inventory not only represents direct loss but also raises concerns about gray market distribution, potential intellectual property exposure, and insurance or compliance consequences. If Tesla responds by tightening security, auditing internal processes more aggressively, and pursuing legal action against perpetrators, that could mitigate long-term impact. However, this situation is a reminder that as Tesla ramps production and energy storage output worldwide, robust operational governance is critical to protect margins and brand integrity. According to Los Angeles Times and ABC News reports, Tesla is again under public scrutiny after a fatal crash at a shopping center in Simi Valley, California, where a Tesla SUV drove onto a sidewalk and into the outdoor seating area of an urbane cafe. Police say an elderly woman was driving the vehicle through a Target parking lot when she attempted a turn toward a main road but failed to make the turn, crossing over the curb and striking pedestrians. One woman who had been walking on the sidewalk was found pinned under the car and was pronounced dead at the scene. Several other individuals, including children inside the vehicle, sustained injuries described as minor. Footage from local news helicopters showed the Tesla lodged against the cafe's outdoor patio area. Authorities have not released the identity of the victim, and no arrests have been made as of the latest reports. The Simi Valley Police Department notes that the investigation is still in its early stages, and they are reviewing surveillance video from surrounding businesses to understand precisely how the incident unfolded. At this point, officials have not stated whether any driver assistance or autopilot features were engaged at the time of the crash. The ABC News coverage situates this tragedy in the context of other recent Tesla incidents, including an earlier fatal crash in Katy, Texas, involving a Model 3 and a residence. In that Texas case, family members have filed a lawsuit alleging that Tesla's driver assistance technology contributed to the collision, while Tesla maintains that the driver overrode the system by pressing the accelerator and that the car was under manual control. Federal safety regulators are investigating that crash. Although the Simi Valley event is currently being treated primarily as a driver-related incident pending further evidence, these high-profile accidents, regardless of cause, feed into the broader public and regulatory debate on the safety of advanced driver assistance, user behavior around these systems, and the design of human-machine interfaces in Tesla vehicles. According to DV, an Icelandic outlet, online users have demonstrated a way to trick Tesla's driver monitoring system by placing a small plastic dummy head in front of the cabin camera so that the vehicle incorrectly believes the human driver is still watching the road. Tesla's driver assistance features, including autopilot and full self-driving capability, rely on continuous monitoring of driver attention using steering wheel input and interior cameras. When the system detects that the driver's gaze has wandered from the road for too long, it issues warnings and can eventually disable automated functions until the next drive cycle. The reported hack uses a lightweight plastic head fixed above the rearview mirror and carefully positioned so that the driver monitoring algorithm interprets it as a human face looking forward. Video clips circulating online show a Tesla continuing to operate in assisted driving mode while the actual driver appears disengaged. The Icelandic report strongly advises drivers not to attempt this, reiterating that local traffic laws only allow testing of truly autonomous systems under formal regulatory permission and with appropriate safeguards. For Tesla enthusiasts and investors, this story underscores the dual nature of Tesla's driver assistance technology. On one side, advanced monitoring features are designed to improve safety and keep human attention on the road. On the other, some users actively look for ways to bypass these protections, which introduces legal and ethical risks and can lead to misuse that Tesla may ultimately be blamed for in the court of public opinion or in legal proceedings. The more such hacks spread, the more pressure regulators may put on Tesla to harden its monitoring, add additional hardware or software safeguards, or even limit functionality in certain markets. According to El Correo, a Spanish business and careers feature tells the story of Alba Abiega, a former senior Tesla executive who left a high-profile role managing Tesla's used vehicle business across Europe, Africa, and the Middle East to create a boutique winery in Spain's Ribera del Duero region. Before her career shift, she had built an international CV in digital advertising, automotive remarketing, and electric vehicle remarketing, eventually joining Tesla in Amsterdam where she oversaw both Tesla's own pre-owned cars and trade-ins from other brands. The article describes how, despite strong compensation, global recognition, and significant operational responsibility at Tesla, Abiega gradually realized after the pandemic that the constant travel, intense workload, and always-on digital lifestyle were no longer aligned with her personal priorities. Together with her family and drawing on deep generational ties to wine and agriculture, she decided to leave Tesla in 2024 and launch a new wine label, Alba en Ribera, based on family-owned vineyards her father had cultivated for decades. Her first wine, aptly named Alba desde Cero, or Alba from Zero, symbolized starting again professionally. The initial vintage of around 40,000 bottles reportedly sold out in about 3 months and received high marks in respected wine guides. Yet the narrative emphasizes less the commercial success and more the personal transformation, moving from corporate hypergrowth in a fast-moving company like Tesla to the slower, seasonal rhythms of viticulture, trading full inboxes and back-to-back video calls for the uncertainty, silence, and creative freedom of entrepreneurship. For Tesla followers, this story is a reminder that behind the company's growth metrics and technological ambitions are thousands of individual careers shaped by its culture and pace. High-intensity environments can produce rapid innovation and advancement, but also burnout and life reevaluations. From a broader human capital perspective, Tesla's ability to attract, retain, and sustainably support experienced leaders will be an important factor in maintaining execution quality as the company scales into new arenas such as robotics and AI-driven services. Thank you for listening to Tesla Daily News. If you enjoyed this episode, please subscribe and stay tuned for our next update.